Good morning, SMF. MMTs, here's the gap up list on the Nasdaq. You've got Apple's got $1.03, but you have a very diminishing gap after yesterday's sell. The trade management, and then we'll take a look. Well, here, let's take a look at the gap open down first. You got NFLX, we're already short. SINA, we happen to be short that one. They're totally overbought. The bull's got a correction. TQQ. Remember, one thing about the bull, though, is that TQQ bull, they're going to re-change the weighting of Apple, which will, as we move forward, which will change that bull. You got price line, we're short at the 520, as all of my MMTs witnessed. That was part of what we did a couple weeks ago on a Saturday and Sunday. That one needed to be sold short, traded long off the bottoms during volatility. Google here, undervalued stock to the whole peer group, 0.71 gap down ratio. Earnings season is upon us. The high oil prices are upon us. So basically the trade management in the Nasdaq 4-digit symbols today is it's going to be very accurate, as that lower end of that bottom price action range in the SMF market maker platform is they're tradable, but you're going to roll up. You're going to need to hit the exit on the long side. So if I'm long 500, I'm selling 1,000. That automatically triggers me short in the same trade electronically, because that's the way it's going to happen. Granted that Alcoa came out yesterday and we've kicked off the earnings season. Profit margin contractions are going to be here in this quarter, but the next quarter after, as we move forward, because of the tensions around the world, and the consumer payroll is at risk. And the consumer payroll, instead of heading down to Chipotle Mexican Grill, which we're short, what a great one that's going to be, is that they're going to pick and choose where they spend. What they'll do during the summer, supply and demand in oil, the demand will be less and the supply will grow because people are going to be cutting back on traveling. I don't see the summer travel season being what people think it is. They're always wrong. And let us not forget, people, that in this new group anyway, is that we've had this great run for the last couple of years. The same thing that went down in the 30s in various different times. The problem is, with all the stimuluses and what Bernanke has been doing, is that high risk. Inflation around the world is already running rapid, and they're raising rates. We have to be watching, I will be watching the yield curve very carefully. And the economic indicators that you're taught, there's 15 of them that come out that are very important, is that they're at the top of the ceiling as well. The profit margin contraction in round 1 of 2011 is upon us, even during this earnings season. What do people do is you buy undervalued, underperforming assets and sell the outperforming assets short, and buy the underperformers that haven't performed. Google would be one of them. Price line is a short, so we're short price line and we're long Google. And there are various different types of pair trades. There's various other ones that we have done. I'm not going to go into that too much right now because it's pre-market. Nonetheless, this is that gap down list on the Nasdaq 100. The trade management is going to roll up. You're going to see slide that bid bar. You're going to have to hit that thing immediately. You will have a very diminishing weakness in that brain that will confirm between the buyer and the seller as to exactly what they're doing to 100% accuracy, called relative price action momentum. Trade management is slide the bid.